Thanks very much. Thank you for the introduction, and it's a pleasure to be here today. For those I've not met, my name is Joe Kadravic. I'm the Chief Executive Officer of Cobalt Blue Holdings. I always find it a pleasure to come to conferences and exchange ideas about battery minerals, particularly cobalt, in both the good times and also in the more challenging times that we have at the moment. Cobalt Blue is an Australian-based cobalt developer. Our main asset is the Broken Hill or Thackeringa project in New South Wales. And let me talk you through the project in the time that I have today. Firstly, we're a very simple structure as a company, a low share count, no debt, approximately 7 million Aussie in the bank. And amongst our shareholders, we count LG International as a cornerstone, and I'll talk about that in a moment or two. Where have we come from? We were listed in 2017, so we've been around for about 2 years. We delivered a scoping study in middle of 2017, which was the first major stepping stone for us in understanding that there were new processes available to us which would allow us to avoid some of the traps of traditional roasting processes which sulfide ore bodies are subject to. We then delivered, after considerable in-ground and above-ground technical work, a PFS middle of last year, which we showcased to the market in July, and that has underpinned our relationships abroad, both commercially and from the investment world. At about the same time last year, we were lucky to bring in LG International as a key cornerstone. I'll touch on LG's relationship shortly. And looking forward, our target for the project is to do some finalised bulk scale testing to prove up our process by mid-2020, and then beyond that, permitting and approvals by late 2020. Let's look at the project itself. There's a fair bit in this slide. It's Broken Hill in a slide, if you like. The project itself is about 25 kilometres west of Broken Hill. And let's step through all of those cost enablers that make modern mining projects successful. Firstly, people. Broken Hill is an established mining town, I don't need to tell you that. Just under 20,000 people, so the right numbers, the right skills, the social infrastructure is already in place, both to build and construct and ultimately operate and maintain the project. Power, we have availability of national electricity market or wholesale energy to the site. You can see a small gold rectangle there in the north east of the slide there. That's 220 kV power at wholesale prices. That does all of our heavy lifting in our processing plant. Water, similarly as well, you can see an offtake there in the right-hand side of the slide. With the completion of a major upgrade, Murray River to Broken Hill pipe, we've now been assured of 1.5 gig for the mine and ultimately the project, and that has underpinned our water needs. The road, you can see a road passing just north of the tenement between the site and Broken Hill. Now that's approximately 25k by distance, so that means our people in Broken Hill will have around a 20 to 30 minute commute every day, and that's about the same as I have and I live in Sydney, so it's a very short proximity to the mine. That road also goes to Adelaide and will be useful for other consumables. The other major logistics enabler for us is the railway line, which is running parallel to the water and power you see there, passes actually through the top of the tenement, and that will do all of our heavy lifting in terms of our co-product sulphur freight. So I believe in a nutshell, we have the people, the power, the water, the road and the rail, all of those significant cost enablers that make modern large-scale mines successful. Let's talk about Cobalt Blue's strategy. If I leave you with no other point today, it's the simply made one that we are different to most ASX juniors. We're not content with creating a concentrate or low value-added product and hopefully selling that into a production chain at 25 or 30 cents in the dollar. What we want to do is build an integrated mine refinery concept that allows us to target a product, a cobalt sulfate precursor product in this case, that lets us clip near parity with the cobalt price. Or our corporate strategy is simply the maximum margin over the course of the cobalt cycle. In order to do that, we need to build a battery or develop a battery-ready product, a high-purity cobalt sulfate. But remember, our natural advantage is that we have both the cobalt and the sulfur already in the ground. So what we're doing is combining both of those raw materials. As nice as that chart looks, it does present massive inherent challenges for us. We're a startup Australian company, and we're trying to place ourselves into a production chain that is 2 and 3 decades old. Now, how does one do that and get commercial contacts with Chinese, Korean and Japanese refiners, or precursors, I should say? The key advantage for us is the LGI relationship I touched on earlier. LG came on as a strategic partner in March of 2018. We are to date the only global Cobalt junior that they've had a relationship with, because they can see the potential in both the geology as well as the processing for us. LG is fundamental to our growth going forward. Why? Because LGI is a deployment of capital for the holding company. So for them, we are a project that needs to create certain returns. So for us, they're a capital supplier, but they are also strategic sources for their sister companies under the holding company. So LG Electronics, LG Chemical. So for them, not only does the project have to stack up as an investment, but they're also sourcing strategic battery materials for LG Chem, which is a top 3 global lithium-ion battery maker. So for all of those reasons, having a partner of the scale and global credibility of LG is critical to us. But the point I'll leave you with is simply this. Lithium-ion cathodes today are rapidly evolving. We've all heard of nickel-rich cathodes or cobalt thrifting. The important point is that LG Chem understand the market, not just today, but where it will be in 5, 10, 15 years. And that's critically important to us as a business, because as a CEO, I'd like to go and ultimately back a project that minimises our technological risk. In other words, produces a fit-for-purpose cathode product that will be ready for the market in that 5, 10, 15-year timeframe. Let me touch on some of the elements of our PFS in cost. Our PFS was purely an engineering deliverable. We've yet to really optimise the plant, which will be the subject in or the focus of our feasibility study. We did, however, deliver just under a $13 C1 US cash cost. Now, we have no major byproducts in metals such as nickel or copper, and that differentiates the project significantly. Some 98% of cobalt today is produced as an accidental metal, if you like, or a byproduct of either nickel or copper. 80+% of our revenue line is cobalt. There is a small byproduct credit there for sulfur. The sub $13 or near a $12 C1 cash cost is unoptimised, but shows on the bottom chart that if we were to get into production on a cobalt market history basis, there'd be only 1 year in the last 40 where we would come to cash break even. In other words, for the majority of the cobalt cycle, based on an unoptimised study, we would make a significant free cash flow margin. And that's really important as a supplier to the global market. It's also very important for project finance purposes. So as impressive as that looks for equity investors, that's a key pitch in terms of economic resilience of the project towards our future project finance partners. Let me just sum up to what we're working at the next 12 months. We will be delivering a resource upgrade within the next 4 weeks, delivering a greater than 20-year mine life with measured, indicated and inferred resources ready for conversion. So that's an inventory of 20 years plus. We're looking to some acquisition opportunities. When cobalt's cheap, cobalt assets are cheap. We're looking to step out and create a truly long-term project. We're looking to finalise bulk testing and prove up those processes over the next 12 months or so, and demonstrate to the market as well as our commercial partners that we can turn this unique ore into a battery-ready product. We're also looking to reduce project costs through the feasibility study. We're looking at tailings reductions, process plant optimisations, as well as significant power costs on top of the resource upgrade I talked about. All of those factors present significant catalysts in the next 12 months, and will prove up the Broken Hill project as a world-class project. Thank you very much.